Hey traders, this is Houston Trong from the tradingedge.org. It's March 25th, 2019, and I'm calling this video, Let's Do It Again Tomorrow. Well, today was pretty much a non-event, and how you could tell quite early on that it was going to be sort of a range-based day is you want to just pay attention to the hourly range. So right from the get-go, the SPYs, Qs, and Dow, I believe the Dow as well, all put in really large hourly candles right at the open. So if you look at the SPY here, it opened here at 9:30. It set a really big range for the day, right? The first hour of the session. Qs, same thing, basically a large ranged bar. Russell actually went down and came back into the range, but then set a really large bar and then could not trade out of it. And Dow did the same thing as the other indices. It set a big range bar in the beginning of the day, then could not break out of it and stay above it. And so once you got back into it, it was just basically a chop fest. And that's how you can kind of tell you're going to have a range-based day when you can't clear outside that hourly range. So this is by understanding that, that's how you mitigate from getting chopped up by just having that awareness that when you're inside this range like this, it can be very tight trading. So you want to be playing the edges as opposed to looking for breakouts, or at least you're not going to expect big things from a day like this. And you're not going to be surprised if things get back on the range here, what could possibly happen. So for me, a good trade on a day like this is when it breaks up over here, and then you have this high created. If it comes back in the range, I'm shorting, looking to get back through the other side. So that's a trade that I took here. Once it came back in this range, I found it in my setup, and it comes back through the other side, and I cover here. And literally, it takes out the low here by 1 penny. So the low was 277.72, and the low here is 64, so like 8 cents. So it was very close, and so I took it off in that range there. And you know, if the guys who are buying were selling the breakouts or breakdowns, you know, their trades fail here and it comes back on the range again to chop further. So you know, that's basically the if I draw it in here, basically a very tight broadening formation. It's very tight. So that's the kind of formation you're trading today, which frustrates a lot of players or traders who don't understand that that's the formation they're trading inside. Because what confuses people is that they have higher highs, right? So you have a higher high here, and then all of a sudden you have a lower low there. And so here's a day which confuses a lot of traders who are used to the programming where they're expecting higher highs or they're expecting lower lows. Now in this case here, you're getting both higher highs and lower lows, and that trips a lot of people up because they don't understand the range nature of the day. So anyways, that's for another day. We can talk more about that. But for tomorrow, you know, we're going to do it again tomorrow, right? So nothing really happened today. The VIX is still where it needs to be for it to take out, as we pointed out in the weekly video, the unfilled gap at 33.19. So if we look at 33.19, it's right there. And we're really within now spitting distance. So today, we had a small gap higher? It was, you know, very close to a flat open. And then, you know, they pushed it higher, came close, but could not do it, and then basically consolidated for the final 4 hours of the day. So at this point here, you have an inside bar, and we're still trading momentum here, right? Because here, strong bar, inside bar, momentum pushed to the upside. Now, had this thing broken down, that would have, you know, changed the narrative a little bit, but it's still doing the Bollinger Band walk here. And if it can pop up tomorrow, it's so close that I wouldn't expect it. You know, I think that's going to get taken out at some point. If it doesn't, then that's going to change the picture, because that means the bears were not strong enough to take out that opening gap, which is usually, or not opening gap, but unfilled gap, which is usually an attractor. So if you're this close and the buyers, or excuse me, the buyers of the VIX cannot close that, then it means that, you know, the equity buyers are back in control again. So let's see how that plays out tomorrow. The other thing that we were watching for today was, you know, as I pointed out in the weekly video, was of course gold and gold miners. I highlighted NUGT in the video. You know, NUGT basically gapped up this morning and just went gap and go. So, you know, today you had opportunities to just basically sit and, you know, buy the pullbacks on gold stocks or GLD, and, you know, to ride that slow train up. So that's, you know, the kind of trade for NUGT right now. You could have elected to do any one of the gold ETFs. NUGT was one of them. JNUG looks exactly the same. That's junior miners, of course. And, you know, GLD was also, again, same kind of pattern. So inside day here on the 4 hour, it popped up, or inside bar pops up, inside bar on Friday, gaps up, and today just slow grind up. Bonds, once again, still climbing up. So kind of a weak close for bonds, but again, bonds are as you pointed out in the weekly video, still grinding higher, and means yields are dropping. So here's that pivot we pointed out, still in play here, 128.59. Will be hard to get there this week unless something really big happens, but that's still the pivot that we want to be watching for. Okay, and other than that, there's a few stocks to look out for. Apple had its news event today. Nothing really came out of it. It didn't sell off as it normally does on some of these news events. So it was kind of a unremarkable day for Apple. Still green month, inside week right now, and red day today. But you have all these support lines coming from these moving averages, which a lot of traders look at. But nothing really compelling here for Apple because it's trading below the weekly open here. But there are some tech names that are you need to watch out for that could possibly break down. So one, for instance, is CRM, so Salesforce. Here in the weekly chart, you have an inside bar reversal. So inside bar went up last week, came back down, and ended up as a shooting star. Right. So this morning it gapped down, and the buyers stepped in when they needed to, because had the buyers not stepped in, then we could see the situation where sellers come in and then push it back down through the range again. So right now we're able to reclaim this level. The low of this previous week was 160.88. We're trading at 160.95 in the post market. So, if it trades below that level, your bias needs to be short, because then the sellers are in control and you have this possibility of things breaking back to the downside. Another chart looks very similar. This is why you need to watch this, is because names like HubSpot, Salesforce, these are all cloud players. They all have, well, not all of them, but they have, the both of them share this same pattern, inside bar reversal. So here's another situation where Salesforce this morning actually gapped down. This is HubSpot, gapped down this morning, and they were able to reclaim it. So the buyers stepped in when they needed to, reclaimed it. But again, if it breaks below 164.41, then that means the sellers are taken over again, and you can be looking for shorts to push it back down to this pivot here. So this will be an easy trade if the sellers show up again and push it back below this support line here at 164.41. So keep an eye out for that. All right, so hope you had a good trading day. And again, because of some of the lack of conviction around things today, nothing has changed since Friday. So stay diligent and be responsive to what tomorrow brings. Happy trading.